Think about tracking the financial health of your Black-owned business. It goes beyond just knowing how much money comes in and goes out. Truly understanding your numbers can unlock powerful insights into your profitability. At its core, the difference between operating and non-operating costs lies in whether an expense is directly tied to your business's core activities or if it is secondary to generating revenue. Operating costs are the day-to-day expenses required to run your primary business function and make sales. Non-operating costs are those that are not directly related to your main business operations. This distinction is crucial because it helps you analyze the efficiency of your core business model separately from external financial influences. Operating costs directly impact your gross profit and earnings before interest and taxes. Also known as EBIT, they include things like the cost of goods sold, salaries for your production or service staff, rent for your primary business location, utilities, and marketing expenses needed to attract customers. These expenses are essential for making your product or delivering your service. Non-operating costs, on the other hand, are typically one-off or peripheral expenses that happen outside of your primary revenue-generating activities. The most common examples are interest expense on loans you have taken out, which is the cost of borrowing capital, and income tax expense, which is the amount you pay to the government based on your business profits. Sometimes, these can also include gains or losses from investments, or a loss from selling an old piece of equipment. For example, if you own a catering company, the cost of ingredients, your chef's wages, and the fuel for your delivery van are all operating costs because they are part of making and delivering food. However, the interest you pay on a business loan you took to buy a new oven, or the taxes you pay on your profit at the end of the year, are non-operating costs. While necessary, they do not directly contribute to preparing and serving the meals that bring in revenue. Understanding these two categories allows you to assess your operational efficiency independently. A strong operating profit shows that your core business model is valuable and effective. Then, by looking at your net income after non-operating costs, you get the complete picture of your overall financial health. This clarity helps you identify areas for improvement and make better strategic decisions for sustainable growth and wealth building.